This is the Trader Investor. In today's video, I want to show you a hack of Trade Ideas scanning. Trade Ideas is pretty pricey, so not everyone is able to pay the monthly fees. So I want to show you how you can use ThinkOrSwim to kind of hack their some of their scans, not all of their scans. There's one particular scan that deals with range of days, where is price in relation to a range of the last 20 days, the last 5 days, the last 10 days, and I've also added the last 50 days. I'm going to talk about a couple of things you can do to manipulate this scan and make it fit your own style. So it all depends on what you're trying to achieve, what time frame you want to trade, whether you want to swing or day trade. It all depends on that, but I'm going to show you what I do. And so let's dive right into it. So first we have to create the scan, and for me the scan starts with stock price. I want it to be minimum of 20 days, and I've set it maximum of 200. You can set it higher. I use this a lot for options trading. So I want to find momentum stocks that are not too pricey. As I do this video, if I set this higher, it might deter some participants. So I just want to make it easier for a lot of you. So you can play around with this number as well. So $20 to $200 is a good range. I want a market cap of at least 300 million. That's minimum market cap. Again, the idea is to really get stocks that move in a big way on a regular basis. Option volume to have at least 100 option contract traded at any single strike price. It doesn't specify which, but as long as there's at least one strike price that has traded 100 contracts today, this scan will pick it up. And then I want volume, average volume of the last 50 days to be at least 1 million. Again, this is for liquidity. This is very, very important, because I want this for liquidity. This last one, study around the top part, is around earnings. I don't want earnings in the next 10 bars. But this, sometimes I take it off, sometimes I leave it, depending on what I'm trying to achieve. If I'm trying to find stocks that are running towards earnings and want to get out before earnings, I will take this out, or I might put at least a 1 or a 2, because I just want to capture that run up. Otherwise, if I want to swing this for longer than 10 days, I will keep this, because I don't want to swing through earnings. I have no idea what earnings is going to be. So if I don't want to hold a position through earnings, but my time horizon is longer than 10 days, then I turn this this option on, because I want to make sure that I give myself some time. But this is just the basics, right? But the juice comes in this next section. Now, it doesn't have to be any of the following condition. This could have been up on top. I was experimenting with something else, that's why I had it down here. But the main thing is you add a study, just like you do any other filter. You add a study, and then when you add a study, the ADX study comes up, and then you just edit that. Now, one thing I want to mention is you can change this to daily or any other time frame that you want. This is one area where you can play around. I like to look at the daily, and then I'll use the hourly to pinpoint my entry. So I like to look at the daily, and based on that, you run the scan. Make sure you save it. You save your scan, you run it, and then down here you'll see I have a watch list, and my watch list matches the name of my scan. That way I can set this to any color I want. I like green, and I can set my charts to green. So as I click on the tickers, then my chart automatically changes for me, and I don't have to worry about typing it up here every time I want to look at a new one. So these are the basics. So now let's go into the juice of this specific scan. So there are a few conditions that I want to see. One, in the last 50 bars, I would say bars because if you do this on an hourly chart, it means 50 hours. If you do this on a daily chart, it means 50 days, 50 trading days. If you do on a 1 minute chart, it's 50 minutes, so 51 minute bars. So it doesn't matter what time frame you choose, this still works. The caveat I'm going to give you is I have not tested it on a very low time frame, so keep that in mind as you play around with this. I've tested it on an hourly and on a daily. This is my sweet spot anyway for me. So what I want to do is in the last 50 days, I want to make sure that price has pulled back. I don't want one that just keeps going up. In this specific strategy, in the last 50 days, I want price to have pulled back at least 38.2%. That's one condition. In the last 20 bars, I want price to be greater than 50% of that range. So 50 bars, less than 38%. 20 bars, greater than 50%. In the last 10 bars, greater than 25% from the low, right? So of that range. Everything is calculated from the high or the low, so depending on what you're looking at. So here, the calculation piece just looks at the high minus the low in the last 10 bars and gives me that 25%. So it depends on whether I add it to the low or subtract it from the high is where you will know where to go from. And then in the last 5 bars, I want price to be less than 50%. So all of this it's going to take you time to understand, but you can pause this video and you can copy this very easily. But the purpose is, as price drives up, it has a pullback. I want to see where it's making higher low, right? That's why you see the low has to be higher than the last 50 days, the last 20 days, and the last 10 days, and so on. So I want to see that it's making a higher low, and then as it is about to make a higher high, I want to capture that move to the upside. So that's the purpose, right? So 50 days, 20 days, 10 days, 5 days. And just to recap, the thresholds for each, for the 50 days is 38.2%, for 20 days and 5 days is 50%, and for 10 days is 25%. This will start to make sense as we go into how these are calculated, right? These are just defined plots, but what we really want to see, the condition is the price is less than, right? The price is less than the 50% high to low range of the last 5 days, right? So in the last 5 days, less than 50%, but it is greater than in the last 10 days, it is greater than 25% from the low. So the lowest low of the last 10 days plus 25% of that range, price has to be greater than that. What that tells me is we are recovering from that downtrend. So as long as in the last 10 days I'm recovering, I'm good. And price has to be greater than 50% of the last 20 days. Again, I want to see that recovery continuation. But from the last 50 days, I want to make sure that price has retraced at least 38.2%. So this is basically what this chart says. In the last 5 days, I have not gone more than 50% of that range. In the last 10 days, and in the last 20 days I have gone above 50% and 25% of that range. 25% for 10 days, 50% for 20 days. So those ranges. And in the last 50 days, I want to make sure I am not at a high point. Again, for this specific strategy, I'm not chasing highs. I want to see a pullback. What I want to see is in the last 50 days, price has retraced at least 38.2%. That's the idea. And the 5, 10, and 20 days are telling me that price is in recovery from that pullback. I want to make sure that the pullback has terminated, that we're not going to continue to make lower lows. So in the last 20 days, I want to make sure that we're higher than the last 20 days, right? This is the real purpose, is we're higher than the last 20 days. We're higher than the last 10 days. Range, the range. When I say last 20 days, last 10 days, it's the range. We're higher than the range of C's. In 20 days, we have recovered at least 50%. And in 10 days, we have recovered at least 25% of that range. And then for the 5-day, I want to make sure in the last 5 days, I am below the high of the 5-day range, because I want a good entry. I don't want to keep chasing. I want a good entry that keeps going higher, but not as high as the 50 days and not as high as the 5 days. That way I can capture it. Now, the reason why I put the 5-day in place, for those of you who want to be technical, is I want to be higher than the low of the 10-day range, but I don't want to be higher than the high of the 10-day range. So to pinpoint, and I said, okay, in the last 5 days, I just want to make sure that I'm not higher than the last 5 days. So within the 10-day range, if there's a small pullback, I want to be able to capture that pullback for a solid entry. This is just a scan, right? Just because it comes up on the scan doesn't mean we enter. The next thing we do is we analyze the chart. So this is, using 50 days, 20 days, 10 days, 5 days range to find a good entry. So now once we find that and we scan it and we save it, that scan is now a watch list, right? In ThinkOrSwim, every scan that you save automatically becomes a watch list. Automatically becomes a watch list. So what we want to do is, as we see any chart we see, in the last 20 days, price is pulling back. Price is pulling back, but one thing I want to see when we have this pullback, I want to see price do this, right? I want to see a very, very clean, higher low. This is important. This is critical. In this instance, all I'm seeing is price just moving up. That's all I'm seeing. So I am going to skip this, right? This is the technical part that I am referring to. I am not even going to a lower time frame because I am not seeing a significant short-term pullback to help me enter this position. So that's why in this hourly, I'm not going to go into it. I just want to show you what that means in this instance. It's the same thing that you see with just more bars. So that's why my analysis is important. So we go to the next one. Now here's interesting. So here we have a pullback, a major pullback, and then from that pullback we have a rally, a pullback, a rally. So a few days ago, right, when you were running this scan on 11/2 or the next day on 11/3, this was an opportunity to enter, because you see this clearly that we are making a high, a higher low, again another higher high, right? Even if you wanted to break this high, depending on your style, it gave you that opportunity. This is where now for me, I go into the hourly chart and say, oh, okay, we made a high, we made a higher low, we made a higher low, and therefore now I can consider a good entry when I break a trend line. When I break a trend line, which gave the next day as a gap, and then I can run with it. So from 106 to 112, this is a pretty good move if you're doing options. Well, even if I'm doing swing trading in this kind of position, I see a $6 move, I'm out the same day. I don't like giving back my gains. As you see, the gains were given back, right? It immediately went back to zero. So even with time decay, you might have even gone negative right here. So that's why I don't like to give back the gains. So now, as you can see, it's clear, right? This is why this scan is giving us those opportunities. Low, high, higher low. Now I just wait. I can set an alert. I can monitor this. I don't even have to scan it anymore. All I need to do is set an alert, right? Here, create an alert. Price is above this level, and boom. And now, even if it doesn't come back in this scan, I know already when price makes this a new high, when it breaks this new high, I'm ready to enter. When price has kept doing, higher lows, I'm interested to participate. If you are doing the hourly to pinpoint, right, to pinpoint your entry from down here as price is making, so remember in our criteria, in the last 20 days, in the last 10 days, the low has to be lower than that range. So as you see this price making higher lows, it gives you that scan. So here, if you are doing on the hourly chart, low, high, higher low, we break this high, you might want to enter it here. Or you say, okay, I really want to see this high broken and then retraced. Again, that gave you that opportunity, you enter here. So plenty of opportunities to enter 39 to 41, pretty decent move. So let's just do a couple more just randomly. So as you can see, pull back, and then boom, we have it. So and one thing you can do is you can change these numbers, right? When I said 50, maybe you want to do 100. The 20, maybe you don't like 20, maybe you like 30. Instead of 10, maybe you like 12. Instead of 5, maybe you like 7, right? You can play around with these numbers, whatever strategy you want to use, and you can play around the numbers. Today, I'm just giving you an idea. Here's how you can take a look at it for your own scanning. And then when you do the retracements, right, you can see when you do this retracement, okay, I want price to be lower than the 38%. So somewhere here, it will give you that opportunity, right, in the last 50 days. So you want to make sure that you're looking at the right time frame, that you're looking at your range the way you want to see it traded. Maybe it's 100 days that you want, right? Maybe it's not 50 days. Maybe this is not 100. Maybe this is not 50 days, right? This is a lot more than 50 days. So maybe what it's doing is the calculation is based on this criteria, right? Of course, not drawn this way, because the way I'm asking you to do is, hey, from this high to this low, give me less than 38.2%. That's why it's giving me this, right? In the last 50 days, this is the highest, this is the lowest. You might want to do 200 days. You might want to do 150 days. You have a lot of flexibility depending on what you like to do and how far back you want to go. And one other thing you can do even quicker is change this to hourly. And when you scan it, it is going to give you a different result. The reason it gives you a different result is because it is calculating based on the hourly chart. So You see we have the same name here, so we can do this one because it's the same here. So based on this chart, it's giving you on the last 5 days, 10 days, 20 days, 50 days. Here's, and in this case, no days bars. Here's an entry, right? I'm not saying it's an entry. I'm just saying this is based, if I change this to 1 hour, this is the scan that is going to give me. So here it is. I change this to 1 hour. This is what it's giving me, right? And so retracement, I just do this roughly, right? I haven't counted 50 bars, so maybe 50 bars is a little bit more. So you just want to keep monitoring this and changing it to your liking, to the time frame you like. I like the daily because the daily gives me the signal, and then I'll use the hourly to pinpoint my entry. Now in Chewy, low, high, very tiny retracement. I don't want to consider this as a retracement, so I'm still waiting for price to do this and then this, so I can enter somewhere in this area. That's what I'm waiting for. So you can set alerts and move to your liking. As you can see, no indicators on this chart up above, right? Down here, these are not indicators. I'm just gauging sentiment. I'm just gauging what the volume is like. I have an oscillator, and in my oscillator, I want to see if there's any divergence, but no indicator to help me decide my entry. I didn't talk about any of this, right? When I talked about my entry, I said, hey, if price does this, I'm entering. That's the critical part. So keep in mind that the price action is king, and it will allow you to do that. The only thing you need to do is decide in this range, what is it you want to do? 50, 20, 10, 5, 100, 50, 37, whatever you like. All you have to do is just change these numbers. If you want to change this from 5 to 7, just make sure you change these in 2 places. If you change this 10, it changes in 2 places. Changes in 2 places. Changes in 2 places. Not only that, those numbers must match down here. Otherwise, your calculation is not going to be right. So if you change the 5, you change it here. You change the 10 here. You change the 20 here. You change the 50 here. Make sure you take care of that. So this is the hack that I wanted to share with you, and let me know in the comment section if you want to understand more, or if you have any additional questions. Alright everyone, take care, and I'll see you in the next video.